The stock market is rallying to 6,600 according to Tom Lee, with the 10 cheapest white moat stocks by Morningstar, as well as Meta's antitrust lawsuit. So let's look at Tom Lee's take on the markets right now.
Yes, I mean, I think I know what you're saying, which is I do think markets are getting a little desensitized.
What I mean, yeah.
Yeah, and I think part of it is if someone had an investor hat on, not tactical hat, you know, really good opportunities are emerging because the number of stocks below the 200-day moving average hit was like 15%. Historically, that's a strong buy signal. I mean, you're going to find a lot of bargains there, and the VIX got above 50, and it almost always pays you to buy the stocks when VIX is above 50. But in the near term, it's a roller coaster. I mean, it does feel like we're having a lot of zigs and zags, and even over the weekend. But to me, I think everything that happened over the weekend, including the Sunday further explanations, all of this is still unequivocally positive for stocks.
Interesting. So when we were below 5,000 and you were on the S&P and you were at 7,100, that's like 40%. So you're now, and were you one of the high people on the street at 7,100? Were you there?
Well, our year end originally was 6,600, but we thought we could touch 7,000 mid-year. I think the 6,600 is still possible, but I do think the 7,100 mid-year is obviously it'd be very difficult to reach.
So
but it's
6,600 by year.
Tom Lee is saying that the stock market could rally all the way back up to 6,600 by the end of the year. That's around a 20% more or 30% more from current prices. So if you're to just look at the stock markets in general, so this is the stock market. So we're currently hovering at around $535 on the SPY. We're currently now around 12% from all-time highs, and his target of 6,600 will be all the way up here, which is around 20% from current prices. That is quite absurd, but yeah. If the tariff news they start to fade off, if Trump starts to make deals with all these different countries, then we could see the markets rippling back to all-time highs. But if all this tariff deal stops, meaning the 90 days is just a stopgap, then we could see a lot more downside in the stock market today. But there's midterm elections coming, there's the Trump put as well, which is what everyone thinks is existent over here. We have the Fed, which is preparing to come in to support the markets if the market starts to tumble. All these things come into effect when it comes to the stock market. So we could see limited downside, but honestly, no one knows. Next, let's talk about the 10 cheapest stocks according to Morningstar over here. So Morningstar recently released this 10 cheapest stocks over here, and they've highlighted some companies that are quite cheap right now. So you have companies like Estee Lauder, Nike, Pfizer, Brown-Forman, and then you have Constellation Brands, Huntington, Adobe, as well as some semiconductor companies. So I'll be picking out the ones that I have looked at the most. So the first company is Adobe. Adobe is a company that is currently trading at 23 times earnings, around 16 times forward earnings. And if you're to just look at the fundamentals of Adobe, you wouldn't see any problem with it. But the problem with Adobe's business is just too much competition and its moat being under attack. So you have all your different LLMs which are able to come out with much quicker and much faster images, and the progression of these LLMs will just increase at an exponential rate. So for me, I think Adobe is an avoid at current prices, although the fundamentals are still extremely strong. You don't know what is going to happen in the future in terms of all these LLMs, and if LLMs they start to increase in terms of its efficiency, in terms of productivity over time, then you could see Adobe's market share being eaten up very, very quickly. Next stock is Nike. So Nike over here is currently a stock that's trading at 18 times earnings, 32 times forward earnings. So analysts are basically projecting that Nike's earnings will drop by around 30 to 40% based on their current price. And for Nike, I think it is a turnaround play. For Nike, it's a margin play. It's just a story of them going back to their roots, going back to increasing their margins over time, and basically just improving on whatever they have and to innovate on creating new shoes and all that, which they haven't been doing so over the past few years. But for me, I think Nike is an avoid as well. Although it is a cheap company, it is not extremely wide moat. It is operating in an oligopoly. You have too much competition in that space. So you have companies like On and On, you have Adidas, you have Puma, you have all your different other shoe companies as well. And then in the clothing line, apparel side, you have Lululemon as well. And then yeah, it's just too much competition in this space. That's why I'm avoiding this company over here. Next company that I'll be looking at is another company, Estee Lauder. So Estee Lauder over here is a company that is down I think around 60% from all-time highs already. So yeah, at one point it was trading at, I believe, $180. Okay, it was trading at $350. So it's currently down around 80% from all-time highs. So Estee Lauder over here, it's a company that basically suffered because of the COVID pandemic. So after the COVID pandemic, what they did was they bought a lot of inventory, and then after the pandemic, the volume started to decrease because there was a sudden bump, and then the demand basically just dropped after that. And so for Estee Lauder over here, because of those inventory that they bought, they were basically forced to sell everything at a discounted price, and that hurt their earnings over time as well as their revenue, because when your volumes decreasing and prices decreasing at the same time, your revenue will take a hit. So for this company over here, it's a turnaround play as well. I don't really like this company because you have a lot of different other competition in the space as well. You have other companies as well, like Elf Beauty, like LVMH. All these other companies, they also have their own beauty line. And so for me, Estee Lauder is an avoid as well. Next company is Brown-Forman. So Brown-Forman over here, they are the company that sells your Jack Daniel's whiskey. And so in the whiskey market, they are basically the biggest out there. But the problem is, for this company, the revenue is declining because the volumes for all your different spirits and wines, they're declining over time. And LVMH, they just recently released their earnings as well today. And the spirit segment dropped by around 8%. And I expect Brown-Forman to follow in the same trend as well. And so currently the stock is trading at a 16 times earnings and a 19 times forward earnings. This clearly shows that the earnings are projected to decrease over time, and that is usually bad for a stock. Next stock is Constellation Brands. So Constellation Brands is a stock that Warren Buffett recently bought into. It is a company that sells your Corona beer. So your Corona beer is one of the most well-known ones out there. And so for Constellation Brands, the problem with this company is they have a lot of their stuff made in Mexico. And if the US were to impose all the different tariffs on Mexico, then you could see this company dropping earnings by around 10% or so. So currently trading at a 14 times forward earnings. I don't think this stock is extremely expensive now. They had a one-time tax expense or something along the lines of that, which caused their earnings to basically be negative this year. I think they had an asset write-down this year. And so yeah, it is a company that Warren Buffett recently started a position in. And if you see him holding this position through this quarter, then I think it clearly shows that this company, Constellation Brands, is a company that has a pretty wide moat. Next, let's talk about Meta's antitrust lawsuit. So Meta is basically facing an antitrust lawsuit today. They are forced to basically sell Instagram and sell WhatsApp as well. I think the FTC is just absurd over here. They are saying that Meta has a monopoly and they bought WhatsApp and Instagram and all these other apps which created this entire monopoly, and now they're forcing Meta to divest all these different services. And so yeah, I think normally if you were to look at the history in the past, for example, let's say Google last year, Microsoft back in the day as well, all these different antitrust lawsuits just shows how strong of a monopoly these companies are. So for Meta over here, it is a company that is trading at 22 times earnings. For a company as wide moat as Meta, with all your different social media platforms under one name, I don't think that this company is expensive by any means. In fact, I think this is a decent buying entry if you're looking to start a position in Meta. And that's what I did. I bought a bit of Meta and I started a small position in Meta. Hopefully, I can add this one on the way down. I'm hoping for some of my companies to have antitrust lawsuit as well, like Visa, for example, so that I can buy some stocks when it comes to all these different antitrust lawsuits. Because in the long term, if you're to just look at the past, all these antitrust lawsuits, they end up being nothing. They end up being just good buying opportunities for you to buy into all these different companies. Google last year as well, Visa last year, as well as Microsoft back in the day as well. Last news of the day, Trump's tariffs. So Trump is he's talking a lot about tariffs again, and that is causing the stock market to tank. So at one point we were up around 1% on the opening, and then now we're down to only around 0.3% up on the day. So Trump is basically just he's creating a lot of uncertainty. He's holding back on his word. He is imposing tariffs and then exempting them and then imposing tariffs again. And so for the stock markets in general, although we have this 90-day sort of like stopgap for all your different tariff announcements, I don't think this is providing any sort of certainty in the markets. If Trump continues on by saying that there isn't any deals to be made, then we could well see the stock market going down and down and down even further. And that's why I'm not adding to my positions yet, because I don't think people are basically pricing in all the different tariffs that we're having and the impact of the tariffs currently. 10% is still a record high tariff in terms of the US tariff rate for all your different other countries. And if you were to just look back at history itself, in the Great Depression was worsened because of the US tariffs. And so currently we're having a record high tariffs, somewhere comparable to your Great Depression. And so I don't think people are pricing in all these tariff impacts that could have on all these different companies yet. So I'm not buying in. I have quite a lump sum of cash right now sitting on the sidelines. I'm waiting for more downside in this market so that I can add to all my positions. Hopefully you guys have found this one useful and invest safe.